Hello, hello. Welcome to the Five Talents Podcast. I'm your host, Abel Pacheco. I interview the top commercial real estate investors and industry experts so you can learn from their experiences. So if you're an investor, a high W-2 earner, or real estate or tech sales professional that wants to invest in real estate without having to manage properties or leave your day job, then this podcast is for you. Or if you're already investing in real estate, but you're doing it part-time and you want to become a full-time multifamily or full-time commercial real estate investor, this podcast is for you too. You're going to learn a ton. You will learn from real-life multifamily investors and other professionals in the industry. They're going to share their blueprints for success, and I'm super excited that you're here. So I hope you enjoy the show. Hello, hello. This is Abel Pacheco, your host for the Five Talents Podcast. We are very humbled and appreciative today. I have one of my friends, one of my good buddies, Mr. Colin Douthit, available for us today. He's coming from a new perspective than I think a lot of conversations we've had to this point. So if you are an active investor, a general partner, you're going to want to listen to this because it will give you some great insight on property management, how to choose one, how to get the best out of them, how to make the most profit. It's really, it's a partnership, right? So that's part of it. And then if you're a limited partner or a passive investor, trying to understand a little bit more about the syndication world, this is going to be a good show too, because you want to know more about the property management side yourself so that you can ask your operator, your syndicator, the person you're investing with. You want to be able to ask them great questions about their property management choices as well. So on either case, it's going to be a great conversation. And so, Colin, first of all, thank you. Thanks for joining, man.
Thanks for having me, Abel. I'm excited to have this chat with you.
Yeah, I connected with Colin earlier this year. We joined a mastermind, a Christian real estate mastermind. Just a great, individual and servant, and I love the professional side of him too. He's just, an outstanding individual character, and you guys are gonna be in for a treat. So, Colin, your background: you have 3 engineering degrees. You're a professional engineer. You started as an investor first, so you were buying just like us. And then you ended up, hey, Mo, let me start a property management company. And now you own a property management company and a construction company, and you just crushed your goals. During COVID, when a lot of people were kind of, going back or retreating, in fact, you went a little the opposite, 6X times what some of your goals were. So let me turn it over to you. Please give us a good introduction. Tell us, a little bit about your background and story, and man, we'll just have a great conversation.
Yeah, absolutely. So, engineering by trade, became a professional engineer, went into that world, more got into the construction side of things as a project manager for construction companies, doing some estimating. As it turns out, a lot of us that have that entrepreneurial bug, we aren't necessarily the best employees. And that was probably true of me as well. After getting let go a couple times, after the second time happened, I had recently acquired or was under contract on my first apartment building. It was a 7-unit one. And so we went ahead and closed on that. And pretty much I'd been, angling towards real estate for a while. I'd spent, a year, 18 months starting to get queued up for it. And but you know what? I'm just going to go down this path. I don't want to mess with going back to the corporate world. I don't want to try being an employee again because I wanted to, be my own boss. And, like a lot of us do, while you guys are syndicating, starting companies, owning, your portfolio of single family homes, whatever it is that provides you that income, don't want to be employees. So started down that path with my investments and working with some partners. We got up to about 60 doors in 18 to 24 months, and which really blew it up. And I started to have to become a property manager. But I was everything, right? I got some software, I got Buildium, started managing properties that way. And I was doing the showings. I was the guy collecting rent. I was scheduling maintenance. Sometimes I was doing maintenance, especially really early on when it was just my own properties, I was doing it all. And actually looked
60 units, like 7 units, 10 units, 5 units. Like what was the range of those 60, the ones that were yours, the first?
Yeah. I mean, so it went anywhere from the 7-unit. Then we ended up, buying a couple packages of single family homes from people wanting to get out of the game.
Okay.
So getting together with some partners, taking down 15 or 16 or 17, I ended up getting a really, really rundown set of 6 duplexes for dirt cheap.
Yeah.
That we've done a huge reposition on, and then picking up the odd single family here, a couple of nice mobile homes as well. That's another,
Nice.
another interesting niche to get into as well. So just started building the portfolio that way. And
Yeah. Yeah, that's awesome. And I see the Kansas City Chiefs champions flag in your background. So I know
yes,
you're from the Kansas City, and I can see you on video. But for those that didn't quite hear on the or can't see on the podcast, big Kansas City. This is Kansas City or sort of
yeah, Kansas
surrounding
City,
areas or
yeah, and the surrounding areas, about an hour radius. We actively manage a lot of stuff in Kansas City and in the surrounding suburbs.
yeah,
I actually live outside of Kansas City in a smaller town of about 5,000, a rural town out in the country.
got it.
By choice, I was actually raised more in the suburbs, and actually started investing out in some of these rural communities, which was just a little bit
Right
different
on.
market. It was in my
Yep.
backyard, and that's how
Yeah.
I got that first one. Actually, I drove by it one day and had a for sale by owner sign on it, and I was like, "Oh, I'm going to make the
I'm gonna go
call."
check it out. Yeah,
Yeah,
that's
so made the call, negotiated some owner financing, and we were good to go.
the true entrepreneur, right? Let me go get my hands dirty and get it done myself. I love it. Well, so I sorry to throw you off
Oh, you're fine.
you're going over your back story, but I just wanted to kind of get a good idea. So the 60 units, you're a part owner in it, and you had to manage it yourself. Like you
Mhm.
said, you were doing all the work. And that's like spread out between an hour in any direction of any of those properties. So that
Yeah,
got
I
pretty
mean,
hairy
pretty
pretty
early on,
quickly.
we were concentrated in our geographic, but yes, still from my hometown, there was a 30, 45 minute reach into some other of those smaller markets as well. And then we started getting a couple in the city as well.
Got it.
Yeah.
So yeah, continue on, man. What happens next?
Yeah. So I was talking to some other people that I respect in the industry, and I was like, I'm thinking maybe I should start a property management company. I'm already doing all the stuff. I'm already scheduling maintenance. I'm starting to have some temporary office help, a couple hours a week. Maybe we should try to scale this up. And they said, well, hey, I know a guy who's thinking about selling. Why don't you talk to him? And so I start talking to him, start looking into financials. We start negotiating down that business acquisition road. And as I learned, when you go down that road, the actual amount of transactions that get across the finish line is much smaller than the ones that start, which was new to me. This was my first time ever looking at that. So we didn't get it across the finish line. We got through negotiating terms and an LOI, but didn't make it past that, unfortunately. But
Hmm.
so a little bit of a chip, but on my shoulder that didn't happen, but also saw the opportunity in property management. I was like, let's turn this up. Like, let's go full tilt. So we got everything in place that we needed to be our own PM company and just open it up full throttle from there.
Yeah, that's awesome. And now you went from 60 to 100 to now you're at
We're at 600 as of today in early December. And
and the beginning of the year 2020, you were at how many doors?
about 125.
Okay, so you went from 125 to 600,
Yeah.
and it's a little under 40 million bucks worth of properties, estimated average kind of
Yeah.
stuff.
Yeah, absolutely. It's about $40 million worth of properties that we're managing, which is really exciting. And, you're just continuing to build our pipeline, knowing that we've got across another couple transactions coming before the end of this year, probably another 30, or excuse me, not 30, about 200 doors coming
Oh,
by
that's
the end of
great.
this year. So it's been really exciting.
Man, what a great run. What a great opportunity that you capitalized on, you seized, and you're like, well, I'm already doing it today. Let me just keep rolling. And
Yeah.
so now the acquisitions for you, it's very different because you're not the owner, but every time a new owner asks you for help and you say yes, your business grows.
Mhm.
So tell us about this, the mindset where I think most of the syndicators, operators, folks like myself, I go, I don't want to do any of that property management. I hire a property manager
Uh-huh.
and I'm not going to get out there and do the hard work. Well, you're doing the hard work, man. So give us any insights and, just your paradigm, how you view things and kind of why. And then, let's talk about the growth next.
Yeah, absolutely. So the why is because I had the experience in it, but now I've it was small when I started, but now the experience is much larger, and my knowledge base in the property management world is much larger. Just the same way with syndicators, right? At some point, you had never syndicated your first deal,
Mm-hmm.
and I looked at the opportunities and said, okay, do I want to work on syndicating or do I want to work on property management? And I chose to focus on property management, because I saw an opportunity there and I was already had momentum going down that direction. I was
Mm-hmm.
either going to have to build out an internal team to do it and just manage the stuff that I was possibly going to syndicate, et cetera, or, totally pivot and just stay down the property management route. And that was kind of the decision I made. I saw an opportunity there. Also saw it as a way to build this business up to generate funds to then invest in real estate in the future, to continue to invest and build
Yeah.
up my capital reserves again.
Yeah. You gain the expertise. You understand it yourself. You know all the things to look for in properties or how to run them. You're
Yeah.
gaining active capital. You're building a business, the value of your business, active capital. And then, it's a good, you stay in the full-time commercial real estate kind of vein actively. And then now, investing passively or actively, you've got more options at this point in
Yeah.
the world, man. So that's awesome. Okay, well, great.
Yeah, absolutely. No, it's been a good decision, and we're looking forward to continue to go to the next step. But when I have a partner in the property management company, but when we're able to start, redirecting property management, income back
Yeah.
into investments,
Mhm.
to continue to grow our portfolio.
All right. Well, let's break into like this property management stuff, man. So we have a number of guests, like I said, that are active and passive, right? So maybe you can take that frame of mind as we kind of go down this next,
Yeah.
series of questions. And it's really just like, man, what the heck do I need to know about hiring a property manager? Like questions to ask them, good interview, what should I be thinking about? I'm trying to, buy my set assets that are 100 plus units, but I also, man, every once in a while I see a 30 unit and I'm scared to get into a smaller deal because I go, well, how can I actually manage this effectively? And, all these things kind of come into mind. So let's peel this onion back a little bit. Right.
Yeah. Yeah, I
Um,
mean, so from a property management perspective,
mhm.
we're getting ready to take on, like I said, 171 unit complex at the end of this month. At the same time, we've got single family houses that we still manage. Duplexes. Somebody's buying a fourplex that's coming online here soon. Like we see the gamut, and property managers, can service a lot of different types of assets. There's a lot of similarities in the workflow of managing a single family home as managing a 100 unit complex, right? Because, all the legal stuff still applies, all of the processes, all the leasing, all of the fair housing, on our side, those all still apply. So that doesn't change too much. You can gain some efficiencies and having, a pulse on your property if it's large enough to warrant an on-site manager. You gain efficiencies by, okay, maybe we don't have to bring in an external leasing agent, or we can identify, issues faster with a problem tenant or a problem maintenance issue because we have eyes on site. We're not waiting for somebody to report it to us. So that you can pick up some of those efficiencies as well. But typically as well, having on-site management, from what we see, at least from what our, pro formas, T12s that we see as we're helping our investors analyze deals is, sometimes people are paying a lot more for on-site management than they would for off-site, or other property management companies are just really getting a good deal with how much they're charging for on-site management.
Yeah. Yeah. Okay. Yeah. Cause in the 100 plus unit syndication, Texas, San Antonio, Texas, we do a few deals where we're plugging in our underwriting. Cause you mentioned that we're plugging in like 1,000 to 1,100, maybe 12, 1,300 if we want to be conservative per unit for on-site staffing. Right. And so we just plug this number in. But I know that on a smaller unit or smaller property, we're kind of removing some of the headcount, but just ramping up instead of charging 3 or 4% to the underwriting for the property management fees, we're like ramp it up to like 10%. Right. So, it's just, that's the whole part where like we're leaning towards you, somebody like you and expertise to say, hey, this is going to make the most sense.
Yeah.
And so anyways, on that aspect, how do I choose or select the best property manager for any property I go after, whether it's 12 units or 100? Is there a general guideline? Should the interview process? How do I approach this thing?
Yeah, I mean, I've been through a lot of I've been the interviewee, I guess, a lot on the property
Yeah.
management side from a lot of potential investors who are now customers.
Hmm.
And it really depends on what you're looking for out of your property manager, right? So one of the reasons that my partner and I work hard at this game, and frankly my team as well, is that we have a
Hmm.
lot of professionals on our staff. So my partner and I both went to school together. We're both PEs. We have a former accountant that's a property manager. We have somebody that used to service billion-dollar loan portfolios, that's into the property management supervisor role. She was a PM for us for a while.
Hmm.
And we have a professional staff. We want to elevate and make property management a professional industry, because it's an industry that gets a bad rap a lot of times, right? So you're getting ripped off, you're not getting communicated with. It's a mom and pop operation that has 100 doors, and they're tracking everything on paper. The most recent thing I ran into, I guess it was a few months ago now, and when we took over a property, there was a manager that was bumping kind of on site, quote unquote, between a couple of different properties that this owner owned, but they were doing no online advertising, and they were putting out ads in the newspaper is how they were hosting open houses for this property. And I'm just like, that's not quite with the times. So it really depends on what you want out of a property manager. If you want to get somebody that's plugged in with accurate reporting, that's leveraging technology to help increase your collect excuse me. Let's try that again. So if you're working with a property manager that's going to try to leverage technology to hopefully increase your occupancy, decrease the vacancy time, increase your collections, they can be there. I'm not saying that somebody that doesn't do technology isn't going to have a successful property management company. And frankly, there was successful property managers for however long before online platforms came
Hmm.
available. But with the society that we live in right now, that's the best way to get a hold of the tenants, to get into their life, to remind them to pay rent, to get them to report maintenance calls quickly, is leveraging that technology. So if I were shopping, I would want to work with a property management company that was leveraging some sort of technology platform, working with their tenants, and discuss communications with them.
Yeah, it makes perfect sense. Real-time analysis or near real-time analysis for you guys means better reporting and kind of better, up to the date metrics or data points that you're going to feed back to the owners, and the owners can say, oh yeah, this is how to make the decision. This is what we want to do. Good
Mhm.
asset manager and a good property manager. Those are the two, individuals or teams or organizations within these bigger deals that were like, oh man, that moves the needle 100%, make it or break it for our asset, right?
Yeah,
So
110%. And we leverage it internally. We have weekly meetings, and there's metrics that we track for our PMs,
yeah.
performance metrics.
Hmm.
And we're able to pull those off on a weekly basis from the software and get the data really quickly. And
Hmm.
that's really nice. And what gets tracked gets done or gets improved. So we've
Yeah.
started tracking these metrics, and we've seen improvement across all those fields.
Yeah. What, from the property management standpoint, uh, the interview, the questions that I should be asking,
Hmm.
maybe we can actually, I apologize. I probably asked two or three questions at the same time. I'm a horrible host sometimes in the way I do this.
It's all
So
good.
sorry, Colin, but taking it from the property management side, what should I, as an owner, be looking to you as the property manager? What should I be looking to you to do for me, or what expectations should I have of you? And let's start. Let me one question at a time.
Yeah,
So
so you should be looking to the property manager to, if it's in line with your goals, maintain the current financial status of the property or improvement,
okay.
right? So they should come in with ideas on how to improve the property, right? Hopefully, not all those ideas involve spending your money.
Hmm.
Now, if we all know that it's a big reposition property and there's going to have to be a couple $100,000 to $1 million
Yeah.
worth of construction, we know that's going to happen. But how can we take an asset that's run pretty tightly and doing okay, and how can we add value, a couple $1,000s a month here or there, or, We look at the annual cash flow that's generated and put that at whatever cap rate and add another $1 million of value to the property.
Mm-hmm.
So, how is your property manager going to help you? How are they going to come in day one to try to benefit? So like, that's something that I would be asking, like, how are you going to make this property better? What's your plan for this? I think that would be really important.
Yeah, gotcha. And then the difference between books, accounting, where the line draws between the property, the key performance indicators,
Mhm.
and construction management. Is it included? Is it not? All of these kind of factors. Kind of give us some insight to this side of the house.
Yeah, so we work with a number of syndicators, all most out of state, and they all want different metrics reported. But generally, the high level ones that we track for them is, what was your average rent per door when we took over management or when you acquired it, and what is it now? What was your global cash flow? Your gross rents then, what are your gross rents now? So those are some of the ones that we look at that are, and then, obviously tracking vacancy and stuff. That's all pretty, logical stuff there. But those are some of the metrics that I dive into to track, the value that we've been adding. Because if we're
Mhm.
going through repositions, which we do a handful of times, people always want to value add. And I do too, frankly. So, people want to value add. So we go through those repositions. So we'll track vacancies, but the vacancy number we know if we took over a property and it's got, you know, 10, 15, 20% vacancies when we took over, and we know that we're going to be doing rehabbing all those units. We don't get too wrapped up in the vacancy initially because we know that's part of the plan is to have those vacancies, rehab them, put new tenants in there, get old tenants out, rehab those units and get the rents up. So really just tracking the average rent per door has been a big metric for us.
Yeah, gotcha. And then how should I be thinking about you guys as a property manager, uh, partners I mean, success. We have to have success together. Your
Yes.
success is my success. How do I find that in the right property manager? How do I find somebody like you that I know is passionate about doing what we're doing and, just making sure they're the right team?
I would say referrals at that point. I mean, you can interview people as well, and get some ideas from them, figure out how they're going to manage the whole big picture, how they're going to manage the construction. Right, that was another one that you asked on. You just mentioned was how do you handle that construction? Does it get marked up? Who's managing that construction? We have a sister company, and we're Atlas Property Management, Atlas Construction, and Office as well. So Atlas Property Management's not managing the construction. Atlas Construction is, but we're not marking that up. I know some PMs will project manage a job for you in the subs, and they're gonna mark that all up, and that might be a great fit for the situation that you're in. I know of some firms here locally that do that and do a great job at that. And then the question is, do you want to pay that extra markup on top of the general contractor's markup?
Yeah, 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 absolutely. So my, trying to figure out, are you the easy button and how much is it going to cost me? Or no, figure out a way to get it done at a different cost. And, this all comes down to like your expertise too, right? Uh, is this something that you're going to take on that you absolutely know you're going to do well at? And, versus, nah, this is not my area of expertise. And you're going to tell. So when do you personally, when do you tell somebody like, I'm going to pass on this project? Or when do you tell somebody, no, this is ideal for me and
Mhm.
I will crush it? Give us an idea of your
Yeah,
perspective.
so we've looked at a lot of projects recently, and we have PMs that have different specialties that I would say this property manager is a good fit for this, right? So
Mm-hmm.
market rate tenants. We have some PMs that are great with market rate tenants. We have some that are great at taking properties that are in really bad spot and repositioning them, right? We have a couple
Yeah.
PMs that just specialize in vouchers. So, figuring out they've got, if the property that's getting brought to us is within the niche where we have the staff that could support it, right? At this point, we don't have the staff or the capabilities to take on, let's say a large LIHTC property, right?
Mm-hmm.
We've looked at them. We know that there's a whole lot more accounting work that's going to go into them. And frankly, from what I've seen, most LIHTC operators self-manage because of the accounting requirements and the large overhead expense.
Yeah. the LIHTC for those that don't or didn't get that, what is it, a low income tax credit? Is that
Yeah,
what it
low
is?
income housing tax credit. Yes.
Low income housing tax
Mhm.
credit. And so there's extra requirements. So that's probably something you're saying, probably someone else is going to take that as
Yeah.
opposed to you. Okay,
Yeah,
gotcha.
absolutely. And there's a lot more reporting, and getting the tenants in and getting them qualified is not the hard part on those.
Mhm.
It's all of the financial accounting reporting on the back end.
Okay, gotcha.
That just becomes really onerous. So, we don't do that at this point. It's not to say that we won't in the future if the opportunities arise and we have the team to do it. Frankly, some of our property managers have experience being the PM, but not doing the accounting work with that
Okay.
sort of stuff. So, that would be a situation where I'd say, no, no, this is probably something that's not up our alley.
Okay, got it. Okay. Hello, hello. You're listening to the Five Talents Podcast. I'm your host, Abel Pacheco. If you're enjoying this podcast, then I know you're serious about achieving financial freedom. Are you ready to create your own path through multifamily investing for yourself and your family? Then I know you're going to appreciate our Investor's Guide to Multifamily Investing. It's titled Tackling Commercial Real Estate the Easy Way. We use this guide to invest ourselves in $93 million worth of real estate. So we're going to show you the basic mechanics of multifamily syndications and how to evaluate your next passive investment opportunity. So the best part, if you subscribe to our podcast now, leave us a review and a rating. I'm going to give you a free copy of our ebook. So please take a moment to do that now. Once you've done that, go to 5tcre.com/ebook, 5tcre.com/ebook. Make sure to let us know you left a review and we're going to send you a free copy. So thank you so much for subscribing to the Five Talents Podcast. We really appreciate it. Well, let me pause for a second, right? Because you've helped us a bunch, and we've got a little bit more insight to the property management world. And in our side, we're always curious to find out. A lot of this stuff is mindset, and you're the entrepreneur, you're the business owner, you are growing like crazy during a tough year, right? So, in that mindset, of going from 100, your original goal was 200-ish doors, and you got to 600. What were some of the biggest challenges, obstacles that you had to overcome, and how did you do it?
Yeah, so some of the biggest obstacles has just been staffing. I started the year with myself and one other property manager and, a couple of maintenance guys. And now we've got 4 or 5 property managers, property manager supervisor, our maintenance coordinator, 7 maintenance guys, and then our construction company has 9 field guys in it, right? So we've, that's all been new. So just the staffing up and building the team has been one of our biggest struggles, right? And not necessarily a struggle, but just an obstacle to overcome, which we have. And, bringing in staff and, reaching outside of our initial network. We hired a lot of people from within our network through referrals that we already knew. So we're bringing in people then we're like, okay, are they going to be a fit for our culture? And that sort of thing. That's been a big if, but, we've had a lot of really great hires. So I don't regret any of them at this point.
Oh yeah, that's good. Well, I'm glad you don't regret hiring anybody. You've got some probably great staff if you guys have been able to ramp up, scale up, and have a lot of success. And so, what does the future hold for you, my friend? What next?
So one thing that we're really focusing on is refining our processes so that we can deliver the best product to the owners and the tenants, frankly, at the end of the day, because if the owners aren't happy, we aren't in business. And if tenants don't want to stay in, then we're in a pretty bad spot as well. But we know that, our goal is to elevate property management to the next level, to take it from a mom and pop operation to a professional industry. And there are other professional operators out there. I am by no means the only one trying to make this industry better, but there's a lot of them that give the bad rap, like I was saying earlier. So our goal is to continue to refine our process, to document our processes further, and systematize everything so that we can deliver a great product to the owners that brings a lot of value.
Yeah.
So continuing to refine that process, and then hopefully hitting some pretty big numbers next year as well, focusing on taking on some larger complexes. Still more than happy to take on the smaller ones, but just wanting some new challenges and additional variety as well.
All right. Yeah. I like the mindset of taking it to professionalism, uh, making sure tenants are good. If your tenants are happy, they're going to stay. If they stay, your owners are happy. So the professionalism and just trying to do right by others all the way through the process. It is a virtuous cycle when we can
Hmm.
partner together with a great property manager, and we crush it, they crush it, and our tenants are happy. Our residents are like, yeah, this is like a home, right?
Yeah,
Um,
absolutely.
and you mentioned document and systematize. Maybe you can elaborate on that. What does that mean?
Yeah, so just like with a lot of different industries, there is a tenant, I guess a client cycle, if you will. You bring somebody in, you have that relationship with them, and then the relationship ends. So how can we make every step in that process as clean and as simple as possible, right? But it's tight, that we're not wasting a bunch of time doing something wrong. We're doing what needs to be done. We're documenting it efficiently through our PM software, through our leases, whatever that needs to be. Maintenance is getting taken care of. They're reporting within our systems accurately, giving the information so that invoices that then go to the owners reflect accurately what was done.
Yeah,
So that,
yeah.
just systematizing everything so that we know what the steps are when we get on board a new owner, whether it's a
Hmm.
single family or it's 100 units. A lot of the steps are the same, and the major difference for us on that is going to be how many units we have to put into our property management system at the end of the day, right? Because getting all the owners information, getting that in, getting it right so that we can track their 1099 information, we can distribute funds quickly to the right account, just all those steps that you might not think about, but need to be done right so that the owner has a good experience.
Yeah, yeah, absolutely. So from your perspective, what's the hallmark of a great property management company?
Oh, that's a great question. Communication is going to be a lot of it, and then bringing value to the owner at the end of the day. Um, Even if their communication's not the best, which you want their communication to be the best, but if I were to be an owner, I would take a PM that didn't communicate as much, but was driving value on the property level, increasing the rents, decreasing operational expenses, finding additional value within that property to make it perform and exceed my pro forma.
Yeah. I I think I'd rather have that impactful property manager over more communication. If I had to choose one, I want them both, but I think
Yeah,
you're
we want
right.
them both.
As opposed to somebody who's Johnny on the spot with an email or a phone call whenever I need
Hmm.
them, but numbers are horrible.
Yeah, exactly. So that's, we want to be good at all of those, right? And,
Yeah,
and we do stress that internally that, hey, these owners, we understand a lot of times this is their biggest financial investment, possibly outside of their house or bigger than their house. Even if it's
bigger.
somebody that just has a single family home, since I was once that investor, I
Yep,
can know where they're coming from. That if they have a bad collections month, that has financial ramifications on them.
yep.
But since I've partnered and done some small type syndication work, I understand where the syndicators are and saying, hey, I need more information because I've got to report to other people, and I might only have $50,000 in this deal, but they've got $250,000 in this deal, so they're looking to me for answers. So we need to be able to communicate efficiently and effectively what they need to know.
I agree. I agree on those fronts too. Yeah, I mean, when I think about how much money I have invested in a single family house versus one of our deals, these, like you said, I never really thought about it. These are way bigger than my single family properties that I'm investing in, my capital in. So it's like, man, it's got to do well. And if I only have one, small property, my my asset management fee or my income, my NOI or whatever may be paying my bills if this is how I'm investing and living off of it. And if
Mm-hmm.
the rent collections are not great that month, it's like, oh, you have a different take on it, even if you're a solo investor buying a
Yeah.
smaller deal. So that makes sense. The communication side of it, we absolutely need your help if things are not going as
Yeah.
smooth as they want to. So
Yeah.
full disclosure and give us the insight, and then we'll shape it how we need to shape it. Right.
Yeah. No, absolutely. I mean, we have RPMs with certain owners that have weekly standing calls, you know, especially on heavy reposition properties, but even ones that
Yeah.
are operating, just kind of operating, hey, what are the updates for this week? Just let us know what's going on so that they have a pulse, so that they can report. And if we have any issues come up, then we can address them together with the owner and figure out what the solution is.
Yeah, this is good insight, Colin. Thank you very much.
Yeah.
And all the properties that you're on today, where do you see, the owners that have the most success, you and them together?
Mm-hmm.
What are the owners doing for you, or what, how are you guys partnered together on the deals that you're having the most success, you're making the most money together?
Um,
Does that make sense?
not
Okay, good.
micromanaging.
Okay, well, yeah, elaborate.
I mean,
Give us
at the end of the
insight.
day, like, we are professionals, right? You hire an accountant to do what an accountant does.
Yep.
Now you can ask them, why does this doing this way? But you trust their judgment, right? You hire an attorney, you hire an engineer, you hire whatever professional service that may be, because they have the expertise. Now, I will say that people do understand probably some aspects more of property management than maybe they would engineering or accounting or a lawyer. Fill in the blank.
Okay, sure.
But at the end of the day, especially if you're out of state, we have our team. I can only speak to our team. We want what's in the best interest for you. We want your property to rent quickly, and we want it to stay occupied. And we want your rents to be as high as possible, because we're working off a percentage of rent collected. So for us, if your unit's vacant or we under rent it, we're leaving money on the table every month as well. So our goals are aligned with yours financially, especially. So don't micromanage the PM. Don't hamstring them. I don't want to talk bad about any of my investors, because I do value all of them, but sometimes we get put in positions where it's like, why are we doing this for a negligible financial savings, but a lot more headache and coordination?
Yeah.
Like we're
What are the couple of those things that you see? Like, Abel, don't do this to my property manager on my properties. What are the cost saving areas that just don't make a lot of sense?
don't buy used appliances 2 states away because you live there, and then drive them here when we can buy used appliances here.
Makes perfect sense. Sounds like a lot of extra work for like
It does. And then by the
20
time we
bucks an
charge
appliance or something.
by the time we charge you guys labor for storing and moving and installing,
Yeah.
we probably are coming out within 5% of
Yeah.
of that whole cost.
Which I'd rather probably have you, take care of the work orders, treat the tenants better, find a way to help the tenants or renters, in some extra time and make the property nicer, as opposed to saving a little bit here and there. Okay. Yeah. That's a
But
good
like
example.
I can't say if that 5% means a lot to somebody else, then I can't tell them no, but I would just say, don't micromanage your property managers. If they're failing at their job and they need to have a boot put where the sun don't shine, and you need to get on them, then get on them, right?
Mhm.
And as we have learned, I can't look you in the eye and say we've never made a mistake, right? We've made mistakes as a property manager. We all do. And we've had owners, say, hey, this isn't good, or this needs to be better, but we don't make the same mistake twice. Right.
Yeah.
And we're like, you know what? You're 100% right. Looking at it from your side, looking back at it, this wasn't handled the way it should have been handled. We won't do it again. We get it corrected and we move forwards. And sometimes you do need to, have that discussion with a property manager, just like you would any other service industry contractor, whatever you want to call it. Right. That's all that relationship is that way, but don't repeat the same mistakes also.
Yeah, I love it. Those are good insights, Colin, and thank you very much. It illuminates a different perspective, and say thank you. So on the mindset of illumination, like, what are some areas that you see some owners, they're not doing the things that, man, from your perspective, they would absolutely crush it if they just did X, Y, and Z.
We have a lot of really good owners, and we filter them, if we can. And so they do a lot of really good things and keeping their properties up to date. The biggest one is going to be keeping your property, up to date, and so we can maximize rents on it. And you have a nice looking property, you get better tenants. You have better tenants, you have better collections, less issues, less security deposit work, less fill in the blank bad stuff that could happen. So, The thing I would say is we see owners sometimes that might not want to invest in their property, and that can be hard.
Yeah.
You know, with our voucher properties, we understand what a voucher property is and what it isn't. And so we don't expect those to have all the nicest amenities in them.
Mm-hmm.
But with our market rate tenants, you know, we want it to be a nice property that we are proud to manage, that you are proud to own, and the tenant is proud to live in. Even, you know, but you know, we understand depending on what part of town it's in, we might not need to put granite in every property. So don't overbuild it, but don't let it float by with 30-year-old carpet.
Yeah. Oh, yeah. Yeah. Get some nice the basics. So you're saying
Basics, yeah.
the absolute basic. Get some
Yeah.
vinyl plank flooring in there and resurface some countertops. And if the toilet's cruddy, then get it out of there. Get some. Okay,
Yeah.
very good. The basics, man. So we can't overlook the foundation of how we have a value add because you know when you take a look at the financials, you know, basically Colin's. You know, if I looked at a number and said, hey, we can raise the rents $50 and there's 100 units. Well, I'm going to take 100 units. I'm going to multiply by $50. That's $5,000 a month.
Mm-hmm.
And I'm going to multiply that by 12 months. That's $60,000 a year. And if I divided that by, let's just say a 6 cap, I don't know where you're at in, you know, in this market or whatever, but you know, that's anywhere, you know, 700, 800, 900 grand at I did 6.5 cap. It was 900K. If it was a 5, it'd be $60,000 divided by 0.05%. Oh, dude, I don't even want to look at that. It's like $1 million or something dumb. So you're like, that's why you spend $5,000 a unit at 100 units. That's why this $500,000, you know, kind of expense comes out because you're trying to make 1 million. Trying to double your money, right?
Yeah. But, you know, I understand, and I have, you know, let my team see through my eyes as an investor because they manage my properties as well. Yeah. Listen, there might not be money in the budget for these repairs, right? Yeah. So how are you structuring, and this is getting into some high levels, how are you structuring your debt? How are your cash reserves for making these upgrades? Get a few quotes before you get started. And don't take your property manager's word on how much it's going to cost. My partner on the construction side, Adam, I don't quote construction estimates anymore. I'm like, let's talk to Adam. And Adam's numbers are always spot on, you know, from when he walks the property. And, you know, mine aren't. So I'm like, listen, I don't quote it. I'll let Adam quote the construction so you can know what you're going to be getting into. But we understand, you know, if you don't have the cash reserves and you're not on a construction loan, you're having to cash flow those rehabs, and that can be painful. I've had to do that before personally. That hurts your cash flow. But I would say if you can afford to cash flow rehabs, if you're in the situation where you don't have cash reserves or a construction loan to get your occupancy up, to get higher rents, like that's probably the wise way to do it, because if you're adding that $1 million in value to the property, $500,000 in value, you might not have that cash flow for the first 12, 24 months. But when you sell the property or refinance the property, you can recoup it at the end of those 36 months, you know, when the occupancy is up and you've got some really good cash flow.
So Colin pointing out this from a property management perspective is the exact same pain and headache as an owner that you will find yourself in. He's just, you know, it's a just different side of the coin, because when you're underwriting your deal, make sure that you raise enough capital for the property improvements, the capital expenses, capital improvements, the deferred maintenance, the interior unit renovations. Because if you don't do that and you try to make those renovations with your cash flow, you're going to put your property manager in a situation where they know what needs to be done, but a word he used earlier, hamstrung. You're going to hamstring them, and they're not going to be able to do what they need to do to create enough value for you. So don't ever get into a deal, for those listening, where we don't have the budget, the dollars raised in advance to do those improvements that you need to. And then also, I also heard, you know, the expertise of the property manager, Colin, which is, hey, you maybe have missed a couple of the expenses that the owners had to plan for. So, you know, just like we do, I rely on an expert to kind of help me with some of this. Colin, even in his business, hey, who's the expert? Adam is the expert. He never misses.
Yeah.
So rely on the expert. And then you're asking them in advance, hey, when I'm underwriting this deal, he helped me look at it. How do
Mhm.
you think it'll be run? Right. And
Yeah.
so,
And I'll
all
give
of
them a
this.
generic square foot cost. Hey, based upon these units, you should plug in $15 a square foot, and we'll get them up to market rate, and we'll get some flooring and some paint in here.
Yeah.
Going back to your what don't owners understand?
Yeah.
This is one that surprised us. Regional construction costs, how different they can be. Because from us here in Kansas City to Denver is very different. And we're much more expensive than Denver is. We shop our prices. We try to bring in subs, see if we can save some money globally. And it's regional construction cost differences. Even though we had one guy, he was down in Texas. He was like, well, this is the light fixture you're putting in. I find it at Home Depot for this much. Why are you telling me it's this much? We bring up Home Depot for Kansas City, and we're like, it's this much in Kansas City. Like,
Yeah.
I don't know what to tell you. Like, if regionally construction booms are going on somewhere, it's going to be more expensive. And, frankly, the legality of your people on site doing the work can also play a factor, right?
Yeah. Yeah. I would agree.
So
That's good insight. Well, Colin, thank you very much, because you've illuminated some of this stuff it's very helpful for myself, for other listeners. And I think just good to have an insight level set for me every once in a while. Hey, these are the things you should be concerned about. And for a property manager, because I want you to have success and we all want to do well. So anyways, but is there anything I didn't touch on today? Anything that you wanted, to cover, to bring some exposure to, that I didn't quite hit on today?
Not that I can think of. We covered a lot about property management. We are essentially a contractor to the owners, but we are also a partner because we have aligned financial goals. You bring in a carpet cleaner, they're a contractor. Their goal is to get it cleaned as quickly as possible and get the money. We are in a longer term relationship with aligned financial goals. So, the property manager, at the end of the day, unless they're a poor property manager, they're not going to be your enemy. They're your teammate.
Yeah, that's awesome. Thank you very much. And Colin, so Kansas City, if anybody has a property, within your area, you know who to reach out to. But where do I go? How do I get in contact with you? Who are you looking for? Maybe share all this with us so the right people reach out to you.
Yeah, absolutely. So you can find our websites, www.atlas.rentals. And you can find me, Colin Douthit, or Atlas Property Management on LinkedIn. That's probably a really good way to get a hold of us at this point. And then, who are we looking for? We are looking for investors. Most of our investors are out of state at this point. That's who our ideal client is. Value add if they want it. With construction in-house, we streamline a lot of those processes for the owners. But we're working with turnkey properties as well. So out-of-state investors that are looking to grow their portfolio in Kansas City, we'd love to help them out.
All right. Well, thank you very much. I really appreciate it. I've had a good fun conversation, man, and thanks for jumping on the show.
Thanks for having me, Abel. I enjoyed it.
Absolutely. So my name is Abel Pacheco. I'm your host for the 5 Talents podcast. We really appreciate the time. And if you heard something that was valuable today, we would love you to subscribe to the show, give us a rating, and leave a written review. It would be amazing. So thank you very much for everything you do. And I'll see you on our next show. Thanks a lot, Colin.
Thank you.
Bye-bye. Thank you for listening to this episode of the 5 Talents podcast with your host, myself, Abel Pacheco. Each week, we're going to bring you interviews from industry experts and commercial real estate investors who followed their dreams and achieved massive success. Before you leave, let me ask you a few questions. Did you enjoy this episode? Did you learn something valuable? Was your mind stretched to what's possible and what you can achieve? Do you want other experts just like the one you heard today? If you answered yes to any or all of those questions, then please take a moment to subscribe to the 5 Talents podcast, give us a 5-star rating, and most importantly, leave us a written review. Tell us what you liked, tell us your favorite guest, give us any feedback. I'm excited to learn and improve so you can get a more valuable show. So thank you again for subscribing to the 5 Talents podcast.